Hello everyone, this is Jennifer. From the following details, calculate funds from operation and show the relevant only in the fund flow statement. They have given the current year's profit and they have given depreciation, which comes under your profit and loss appropriation account, goodwill written off, profit and loss appropriation, loss on sale of furniture, profit on loss appropriation account. Profit on sale of investment will come under your credit side of your profit adjusted profit and loss account. Tax provision is adjusted profit and loss account. Dividend paid, adjusted profit and loss account. Preliminary expenses, adjusted profit and loss account. Transfer to general reserve, adjusted profit and loss account. Other information: machinery was sold on 1/1/2015. So you have your machinery account. So you're supposed to prepare a machinery account. Book value of investment sold was 35,000. Increase in working capital is 2,77,000. So since you have given increase in working capital, straight away we start with adjusted profit and loss account. So before I adjusted profit and loss account, you're supposed to calculate the machinery account. So two balance brought down, which they have given, is 40,000. So if you see, machinery was sold on 1/1/2015 at a book value of 40,000. So you assume the book value at the beginning of the year is 40,000. So two balance brought down 40,000 by cash for the sales that has happened 40,000. And also in the question they have given depreciation is 45,000. So we consider it as a depreciation on machinery. So by adjusted profit and loss account, depreciation 45,000. So to cash account, which we assume it to be purchases, since it is cash moving outflow of cash, it is 45,000. We consider it to be purchases. So your machinery account gets balanced. So this depreciation will get into your adjusted profit and loss account, and this purchases and sales will get into your fund flow statement respectively as inflow and outflow. So moving on to your adjusted profit and loss account, we start with to depreciation 45,000, to goodwill written off 12,000, to loss on sale of furniture 5,000, to tax provision 35,000, to dividend paid 40,000, to preliminary expenses 5,000, to transfer to general reserve 25,000. So all your non-fund and non-operating expenses will be debited and your non-fund and non-operating incomes will be credited. So buy profit on sale of investment 15,000. To balance carried down, which is given in your question as your profit 80,000. So your balancing figure is buy funds from operation 2,32,000, and it gets balanced. You adjusted profit and loss account. You're moving on to your fund flow statement. You start with funds from operation 2,32,000. Increase in the working capital is your application of funds. Why it is your application of funds? Because your working capital expenditure has increased. So it is an application of fund which they have given in the question 2,77,000. And sale of investment 35,000 plus 15,000. So if you look into your question, book value of investment is 35,000. So and plus your sale of investment, which is your 15,000, both will be considered and it will become 50,000. Your purchase of machinery is 40,000. From your ledger account we get it, machinery ledger. Sale of machinery is 40,000 again. So this also from your ledger account. So your fund flow statement gets tallied. So moving on to your next question. So from the following balance sheet and additional information given, you are required to calculate funds from operation for the year ended 2015. So they have given during the year 2015 rupees 15,000 as dividend was paid. So dividend paid will come in your adjusted profit and loss account. So let us consider what all only will come in your adjusted profit and loss account in order to calculate your funds from operation. So dividend paid will be debited in your adjusted profit and loss account. Depreciation written off on plant and machinery 6,000 debited in your adjusted profit and loss account. Provision for taxation made during the year 5,000 debited to your adjusted profit and loss account. Profit on sale of machinery. So it is a profit which is on the sale of a long-term asset which needs to be credited in your adjusted profit and loss account. So if you see here in your balance sheet, these are your long-term liabilities with your share capital and your current liabilities, and your long-term assets and with your current liabilities. So there is an intangible asset called the goodwill. So the if you say the goodwill is come down, so which is considered to be a goodwill written off, which will again be considered as your expense in your just a profit and loss account, so it will be debited. So to goodwill written off 20,000 minus 10,000, which is 10,000. To a dividend 15,000. So how did you get this 15,000 is basically they have given in their question itself directly. To depreciation on plant and machinery 6,000. To provision for taxation 5,000. By balance brought down, so this is your opening and closing balance of your profit and loss account 20,000. By balance brought down and to balance carried down. By profit on sale of machinery 2,000, and by funds from operation, which is your balancing figure 36,000. So your profit and loss adjustment account is done. So moving on to your next question. The next question, prepare a statement of source and application of funds from the following details. X Company Limited issue 1,000 shares of rupees 100 each, a premium of rupees 20 per share, and duly received. So what is your share premium? So the issue of shares is 100 rupees but with a premium of 20 rupees. So 120 rupees is the value of the share. So 10,000 into 120. So the issue of shares, which is nothing but your sources of raising capital. So it comes under your sources of in your fund flow statement as 1,000 into 120, which is 1,20,000. So the company redeemed preference shares of 1 lakhs at a premium of 10,000. So redemption of preference shares is an application of funds. So 1 lakh plus 10,000, it is 1,10,000. Investments are sold for 50,000. So investment are sold. So when there is investment sold, it becomes a sources because there is inflow of cash. So it comes under sources. Sale of machinery during the year 30,000. So again it is sales, there is inflow of cash, so it becomes in sources 30,000. Purchase of fixed asset, outflow of funds, so it becomes application of funds 1,20,000. Dividend paid 40,000, again outflow of funds, it comes under application. Income tax paid, outflow of funds, application. Increase in working capital, outflow of funds 60,000. And closing balance of profit and loss account is 45,000. So this will come under your profit and loss uh, adjusted profit and loss account. So statement of source and application of funds. You start with issue of shares 10,000 into 120, 1,20,000. Sale of investment 50,000. Sale of machinery 30,000. Redemption of shares 1 lakh plus 10,000, 1,10,000. Purchase of fixed asset 1,20,000. Purchase of payment of dividend 40,000. Income tax paid is 35,000. Increase in working capital is 60,000. So if you balance it, balancing figure is nothing but your funds from operation, which is 1,65,000. Therefore your sources and application of funds get balanced. So next question, from the following information prepare a statement of sources and application of funds for the year ended 31st December 2014. Increase in working capital is 4,000. Depreciation increase in working capital will be your application of funds. Depreciation of fixed asset comes under profit and loss adjusted profit and loss account. Dividend paid is application of funds, goodwill written off, adjusted profit and loss account, fresh issue of equity shares, sources of funds, machinery was purchased. So purchases will be your application of funds, preference share capital redeemed, application of funds, net profit is 9,000. So net profit they have given it to be 9,000. So you start with adjusted profit and loss account. So you do with two depreciation on fixed assets 17,500, two dividend paid. Dividend paid will basically come in two places. One is adjusted profit and loss account, it will be debited, and in your fund flow statement it will come an application of funds because it is outflow of funds 17,500. Two goodwill written off 15,000, and if you see two balance brought down, they have given your net profit and they have given your net profit they have given, which is 9,000. So before that you can write it as by funds from operation. If you see 17 plus 17 plus 50 plus 9,000, which is 59,000, so that becomes your balancing figure. So to balance carried down is nothing but your net profit, which is 9,000. So your funds from operation is 59,000. Moving on to your fund flow statement, issue of equity shares 15,000, funds from operation 59,000. If it is funds to operation, it will become application of funds. Increase in working capital is 4,000. Any purchases will become application of funds. So machinery purchased is 10,000. Any redemption of shares will become application of funds. Why all this will become application of funds? Because there is outflow of funds. So redemption of preference shares 60,000. So your fund flow statement gets balanced with 74,000. Next question, from the following trial balance, prepare fund flow statement. So they have given the opening and closing balances, and you're supposed to start with schedule of changes in working capital. Since in this question they have directly told fund flow statement, you will start right from the first step, which is schedule of changes in working capital. There are no adjustment given, so it is such an simple problem. So let's start. So first let us see what are your current assets. So if you see in your question, your current assets are stock, debtors and cash. So you start with stock, debtors and cash. So the logic behind preparation of schedule of changes in working capital is, if your current asset increases, your working capital increases. If your current asset decreases, your working capital decreases. And for current liability, it's just the reverse. If your current liability increases, your working capital decreases. And if your current liability decreases, your working capital increases. So stock has increased, so you'll put the amount of increase in your increase amount. So debtors has decreased by 10,000, so you'll put it in your decrease amount. Cash has increased by 60,000, so you'll put it in your increase column. So total of your current asset, total it and put it. Current liabilities, your current liabilities as decreased, so your working capital will increase. So current liability has decreased by 30,000, so you'll put your 30,000 in your increase column. So total current liabilities, working capital is equal to A minus B, current assets minus current liabilities. So increase in working capital is nothing but 2,55,000 minus 3,55,000, which is 1 lakh. And if you see, increase amount is more, so your decrease amount is less, so balance it with the amount, so it needs to be 1 lakh itself. So 1 lakh and 1 lakh, and your schedule of changes gets balanced. So this increase in working capital will be taken in your application of funds in your fund flow statement. So preparation of ledger accounts, you start with machinery account. By to balance brought down 50,000, by balance carried down 60,000. So there's a balancing figure of 10,000. So since it is a debit balance, you will take it as to cash account, which is considered to be purchases. To cash means cash is going out. That time the company has purchased something, so it is to cash account. So it is 10,000. So this will come under your fund flow statement as purchases of machinery under application. So next is your furniture account. For all the non current and the long term liabilities and assets, you will prepare your ledger accounts. The furniture account, to balance brought down 10,000, by balance carried down 15,000. Again the balance, it is to cash account, purchases 5,000. Share capital, by balance brought down because it's a liability, so by balance brought down 3 lakh, to balance carried down 4 lakh. Here by cash account, so it is 1 lakh. So cash is coming into the business, so it will be considered as issue of shares in your fund flow statement under sources. Adjusted profit and loss account, so all the non-current and non and long-term liabilities and asset ledger accounts is prepared. So your third step will be adjusted profit and loss account. So you have your opening and closing balance. By balance brought down 15,000, to balance carried down 30,000. So there are no adjustments to be taken, so directly the fund balancing figure will be considered as by funds from operation 15,000. Fund flow statement, so you start with issue of share capital. How do you get this issue of share capital is, so basically, to simple logic, let's start from the schedule of changes in working capital. Increase in working capital will be application of fund, so 1 lakh. Moving on to your machinery account, it is to cash account, purchases. So purchases, application of fund, purchase of machinery 10,000. Moving on to your next account, which is furniture account, it is to cash account, again will consider as purchases, so purchase of furniture 5,000. So your share capital account, it is by cash account, so you will consider issue of shares, cash is coming into the business, so there's some issue of share capital, so which is 1 lakh. And from your adjusted profit and loss account, we have funds from operation 15,000. So your fund flow statement gets tallied. So your next question is, from the following particulars, prepare a statement of sources and application of funds for the year ended 31st December 2015. X Company Limited issued 10,000 shares of rupees 100 each at a premium of rupees 20, and all the shares were subscribed and fully paid. The company has redeemed preference shares for rupees 1 lakh at 10% premium. So the company has redeemed preference shares, it's nothing but your, so first instance, issued 1,000 shares of rupees 100 each at a premium of 120 is nothing but your issue of share capital, which is under your sources of funds. So the company has redeemed preference shares is redemption of preference shares, which is under application of funds. Investment are sold for rupees 50,000, resulting in a profit. So sale of investment and profit on investment will come under your sources of fund. Sale of machinery and will come under your source of fund. Loss will come under your adjusted profit and loss account. Purchase of fixed assets, so purchase of fixed assets will come under your sources of fund, application of funds. Dividend paid will come under your adjusted profit and loss account and application of fund. Income tax paid also come under your application of funds. Working capital was 1,20,000, 1,80,000. So there is increase in working capital. Directly they have given working capital. So 1,20,000 1,80,000 minus 1,20,000, which is 60,000, is nothing but an increase in working capital. Directly you can take it. So closing balance and profit and loss account was 45,000 more than the opening balance. So that is nothing but your to balance carried down, which is 45,000. So you consider opening balance to be nil. Depreciation provided for the year is 50,000. So two depreciation account under your adjusted profit and loss account, and two preliminary written off under your adjusted profit and loss account. So your solution start with preparation of schedule of changes in working capital. There is no necessity to prepare the schedule of changes in working capital. So we have closing working capital 1,80,000 less your opening working capital 1,20,000. Increase in working capital is 60,000. So move on to your adjusted profit and loss account. To loss on sale of machinery is 5,000. To dividend paid is 40,000. To depreciation account is 50,000. To provision for taxation 35,000. To preliminary expenses written off 10,000. By balance carried on you consider to be nil. To balance carried down it's 45,000 because they have told the closing balance 45,000 more than the opening balance. By profit on sale of investment is 20,000. So your balancing figure funds from operation is 1,65,000. So your funds from fund flow statement, issue of shares 1,000 shares into 120, 1,20,000. Sale of investment is 50,000. All the sales will be considered as application of funds. So sale of machinery is 30,000. Funds from operation which we got from the adjusted profit and loss account 1,65,000. Redemption of preference shares is 1 lakh plus 10,000, 1 lakh 10,000. Purchase of fixed asset is 1 lakh 20,000. Dividend paid is 40,000 and income tax paid is 30,000. Increase in working capital 60,000. So your fund flow statement gets tallied. Because it's a very easy sum, everything is directly given in your question. So moving on to our next question, which is following are the summarized balance sheet of Sahana Limited as on 31st December 2013. So you have your balance sheet given. They have given the liability side, asset side, and we have the additional information given. Investment costing 8,000 were sold during the year 2014 for 8,500. So 8,000 rupees was the investment paid and it was sold for 8,500. So you suppose it was sold at a profit. You'll prepare your investment ledger account and you'll show this respectively. Provision for taxation you have given, so provision for taxation ledger account you'll prepare. During the year, part of the fixed asset costing 10,000 was sold for 12,000. The profit was included in your profit and loss account. The fixed asset cost is 10,000 but it was sold for 12,000, so your profit is 2,000, which will show it in your fixed assets ledger account. Dividend paid during the year, so first you will consider it in your adjusted profit and loss account as 2 dividend paid, and next in your application of funds in your fund flow statement 40,000.